Hi, everyone, and welcome back to the AI Interconnect podcast, the series where we explore what's next at the intersection of AI, automation, and real world business. And today, we are diving into a massive challenge access to home ownership. And for millions of people, the dream of owning a home is out of reach, not because they can afford it, but because traditional systems were not built for them. Our guest today is someone working to change that. Annabel Little is loan strategist at Share, a platform redefining ownership by helping people build equity in home without needing to qualify for a mortgage. Her work sits right at the crossroad of finance, impact, and innovation. And I'm really looking forward to unpacking it. And Annabelle, welcome to the show. Happy to be here, to see you here.
Thank you. Thank you for having me. Yeah, it's
Fantastic,
exciting.
fantastic.
Mhm.
Where it's gonna be great. Um, let's start from the beginning. We are You're building your career around credit, lending, and financial system. And now you're applying that knowledge to one of the toughest problems in the country, housing access. What drew you into this space originally? And was there a moment or story that shifted how you saw your role in finance?
Um, well, second here. Well, my role in finance started many years ago when I moved to San Jose, California, and realized I needed to get a job. And I went into a work processing class so I can be a faster typist. And one of my first jobs was a loan processor. And I just fell in love with the position. I really liked structuring. I like the puzzle, building a puzzle from looking at a, 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 an individual's credit profile and being able to help that individual by looking for products, working out any type of challenge that you may have with purchasing a home or refinancing a home. And so I work with the best in the industry. I learn from the best. And at the same time, I challenged myself. I wanted to be better in every position. I wanted to, from a processor, I drew docs, I did funding, then I went into underwriting, then I got my MLO license, then my real estate license. And that led me to many amazing positions, including the one we share, where I can be face to face with consumers. And with all the knowledge that I have, I can help them um, locate a home for them, not only from the real estate perspective, but also on the financing. If I look at the tax returns, I can be able to obtain income that they didn't even think they had. Because when you're an analyst, you're looking at every single avenue. You want to make the loan work. You want to help this family. And so that's how I ended up in this industry by loving people, by helping people, by looking at the industry and thinking, maybe I can do something about this. Maybe I can help people that need homes. And how do I do that in the right way? And it's by learning all the guidelines from the lenders, figuring out loopholes, um, and basically just challenging myself. Yeah.
Wonderful,
Yeah.
wonderful. I love it. That's great. And now you are at Share, and the model is fascinating. It's tackling homeownership from an entire different angle. And for listener who might not know and familiar yet, can you explain how share works and what problem are you solving that traditional lenders are not?
Well, I'm going to answer the second part first. What the challenge here is, a lot of individuals have only one salary. They're not married or they don't have a significant other and they want to own a property. They're tired of renting. Paying rent means you can pay rent for years and not see any wealth. When you own a real estate property and you pay towards the mortgage, eventually you become wealthy by the way of equity. Um, and that's basically one of the biggest inheritances here in the United States is when someone dies, they may not have a lot of money in the bank, but they have a property, and that means a lot of money because of the equity. And so you got to pay for a living somewhere. Either you pay rent or you buy a home. And buying a home, in my opinion, is one of the biggest investment an American family is gonna make, or any family in any
Yes.
country, I think, is gonna make. And so you wanna be able to not only buy the property but not use all your paycheck towards your property. You want to live comfortable. You want to save for sending your kids to college or vacations. So having that balance, that's when all the equations for underwriting come into play because you got to use a certain percentage of your salary to qualify. So you have leftover. So there's a lot of mechanical things behind getting somebody approved for a loan. But we share one of the main challenges, I think, and that's how my CEO came up um, with this product of, hey, why don't we run a co-ownership program, which means you get two individuals to buy a property together. That way, the down payment is cut in half, the mortgage payments are cut in half. These people, instead of buying a one studio or one bedroom apartment, they can buy a 2, 3 bedroom property with a nice backyard. And if they can coexist, if they can make it work, basically they're owning wealth already by the way of equity. And so my company right now is it's working into getting approved for what is called tenancy in common loans, which is um, what I just explained: two people coming together buying a property. They apply for the loan, but each has their own loan within the same real estate. And right now we're working on getting approved. We're not approved yet, but what we're doing is we're doing the back end, which is matching people that want to buy a property within the same zip code or within the same area, and we're referring them to those lenders that do those tenancy in common loans. And by doing that, we help people, and we also can do the real estate side, which is commission. And so with Chair, we can do NMLS or MLO loans, like me with license, but we can also do real estate. And if you get a client that wants to buy a property and needs a loan, you get a commission on both sides. So it's a win-win for everybody, I think, with this company, helping families and helping us become successful. Um,
Wonderful. Yeah, this is great. Um, this is something new for me, but I love it, and that's why I wanted you to give us your insight. Let's get
mhm.
into the frictions. And you're working inside a space that's highly regulated, risk sensitive, and historically slow to change. What are the
Very.
biggest challenges you and your team face right now? Whether it is tech adoption, or maybe policy, consumer trust, or credit frameworks.
Well, so you can understand the challenges. I have to explain what Share has and doesn't have. So Chair is, like I explained, is a mortgage broker and a real estate firm combined. And we all work together. It's a huge team. We love it. But the technology is lacking. We don't have a system that connects all of the channels. We're still doing it the old-fashioned way. We have meetings, we pick up the phone, we send emails. I think that's going to be obsolete in a couple of, if not a couple of months, a couple of years. It's going to change because there's so much technology out there being worked on. In fact, I worked for a company called Citro in Mountain View for 2 years, where they hired me for my mortgage brain. They said, we need to put your brain into a portal so we can automate all of this technology out there. And so, and also being an underwriter and underwriting loans day in and day out and looking at the processes, I always thought there's got to be a faster, better way to do this. I mean, there's a lot of repetitive things I have to do. There's a lot of equations you got to do by hand when automation is out there. You just need to put it together. Or banks, like you say, they work slow. They need to come up and sign up for these technologies because they're out there. And I live in Silicon Valley, where you have the giants of technology. So we all have it here. And so when we put that portal together, it was an AI for mortgage brokers, which means you can automate and you can alleviate all these repetitive tasks and all these manual errors that you make by having it all done for you with machine learning, with AI at its best. So what we built, because I was part of that, is you get all these wholesale lenders, because a broker has to be approved with wholesale lenders. Wholesale lenders, they all have their own portal, their own logins, their own rate sheets, their own guidelines, their own products. Each lender, you can be approved for 300, 1,000 lenders. So the broker's challenge and what Chair is going through now is like, if you have a borrower, let's say a borrower that has complex income, to Schedule E's, one 1065, one S corporation, one C corporate. I mean, you can have whatever. And then you structure the loan and you're like, I'm going to go out there and I'm going to price this loan. So a mortgage broker calls 300, 200, maybe you 10 best lenders and say, can you price this loan for me? Or you sign in on each portal. You have to plug in all the information or upload the application. You got to do a lot of manual things in order to get the pricing. So what Citro is doing is it does it for you. It does all the pricing in one portal. It gives you the best pricing from all the 300 lenders. And so that technology we need here at Chair, so it can facilitate the pricing, the uploading, the creating of the loan, the submitting it to the lender, and guidelines. Each lender has its own guidelines. I mean, for the most part, they follow Fannie Mae and Freddie Mac, but lenders have their own overlays. Let me give you an example of an overlay. The VA loans, their VA guidelines don't require a FICO score. But lenders say minimum FICO score is 580 or 500. They come up with a FICO score. And the reason behind it is because in order to price a loan, you need to have a FICO score. You need to be able to say, and you probably heard this before, the higher the FICO score, the better the rate. That's why it's important to take care of your credit. So a lot of things have to happen in technology is out there. It's a matter of buying it or getting the license for it and utilizing it. And then Chair is a company that is evolving, is becoming better and bigger every day. I have no doubt in my mind we're going to get there. And one of the things I've been talking to the CEO is, why don't we become a direct lender? I mean, I can help you with that. I help other banks do that. And so we're trying to also become a direct lender. And by becoming a direct lender, then you have, it's it's another level. You have control of the loans. You have, a little bit more control on pricing. You can charge your processing fees or underwriting fees directly to the borrower versus now is being taken out of your commission. I mean, you have more leverage in every aspect. And also, one of the things as an underwriter is, and from my perspective, is when you have a very complex loan, but you know it's a good loan. I mean, I have the assets, have the income, but something about the loan, it doesn't qualify. You call the lender and you try to negotiate. Look, I have this loan. What can we do? Well, the first thing they say, get me compensating factors. So underwriters are very good at doing that. We can get compensating factors and try to negotiate. And the lender may say, look, it's a common sense loan. Let's do it. So you have that kind of leverage when you're a direct lender and not so much when you're a broker, because there's another step. You have to go through the account executive. The account executive has to go to the whoever is in charge versus you being the lender and you having the risk. Basically, you take all the risk. So if you look at a loan, you go, look, I'm going to take the risk because this loan is a common sense loan. Why not? Then those things can be done.
That's
I know I'm saying
that's
too much.
ve-
I'm sorry.
no, no, no. If no, and that's why I'm not uh, cutting anything, and I think it's very very interesting, and uh, I'm all here because I don't know this business, and this is amazing. This is part of as you say, this is the most important investment in somebody's life, in the family's life, and maybe the biggest investment, and and this has to be taken very seriously, and you're doing this. Uh, uh, it's amazing. It's great. And on a more personal level, what are some of the pain points in your role that maybe people don't see from the outside?
um, well, dealing with people.
At
Uh,
at personally level, not at company level.
oh. Well, like I was saying, you deal with different personalities. You have to. I mean, I've been doing this for so many years that you get to the point where you just want to solve the problem. You don't want to get into arguments. You don't want to. You see, I see the problem and I see the solution, and so you just need to communicate that. And it's difficult for people oftentimes to accept failure or accept change, and that happens in the professional, in my professional life and my personal life, where I make mistakes myself. And in many years, when you work for a bank, you have to be very willing to learn, because you come in and they give you this set of guidelines that you got to follow. So when you're underwriting, you're a little bit FBI agent, you're a little bit police, you're a little bit, um, CPA, because you got to know how to detect fraud. And by doing that, you have to be able to read between the lines and not take everything face value. You got to run, some investigations. You got to do due diligence. You got to. I mean, and for the most part, underwriters have all these tools at their disposal. We have accounts, for example, LexisNexis is a big one. A lot of lenders use them, and basically you plug in the borrower's information, so security information like that, and a report will come back with this person has lived in this property within the last whatever years. This person works for this company, and this is the profile of the company, and the social security is validated or doesn't exist. And from that point, you're looking at whether or not this is a legitimate borrower. There's a lot of fraud out there, and so you got to do due diligence, and you want to make sure that you're doing a good job. And so one of the challenges for underwriters is that when you put your name on the loan, you are personally and professionally liable in a way, because the loan has a life. It closes, it funds, it records, then it goes into servicing. Then either the same lender will do the servicing, or they sell the servicing to another company, and the borrower starts getting bills, and they start getting, coupons or whatever you call it, and then they start paying the mortgage. And then um, the loan is maybe sold to another investor, and then they run another a QC on the loan, and the new underwriter may find something they don't like, and they go back to the original underwriter. So the original underwriter has to explain why they approved the loan the way they did, and there are mistakes. They can find mistakes in the loan, funds and closes, and nobody realizes it because the underwriter made a mistake. And so it's a big responsibility. And so with all the training that I have, I am already, how can I say this? I'm used to change and training and new things that I have to learn every day. Because for many years, we used to use a set of guidelines, and they didn't change for about 3 months. You have a new guideline, a new update. And after the mortgage meltdown in 2007, when I came back into the industry, the guidelines were changing almost every day. Every day you were having new things,
Of
new
course.
FICO scores, new. So at one point I said, I'm not going to memorize this. I'm just gonna educate myself to look it up. So when I get a phone call, Annabelle, what is this? Blah blah blah, and I would say, look, give me a second, let me look it up, and I'll get back to you. I just wanted to be absolutely
Of course.
sure I was given the most current information out there. So yeah.
Well done. No, you have definitely a great experience, and yeah, everything may be different from one day to another or one week to another. Uh, I mean, it's normal to. I mean, you don't want to give the right answer or the answer immediately, and uh, let me check it out, and I give you the answer. But this is very very interesting. All this. Um, let, let's talk about. We talked about a little bit about technology, but maybe if you know anything about AI and alternative data model that are starting to play a bigger role in lending and credit scoring, but
Yeah.
there's still a lot of skepticism. How do you see AI fitting into what you do, either now or maybe in the near future?
Because I worked for 2 years for a company that built a portal, and I every day I met with the engineering team, and part of my job was to train them in mortgages. I mean, these engineers are PhDs.
Yeah.
I'm not an engineer, but I know mortgages. I know the mechanics of it. I know what needs to be done, from doing it for 30 years, and always thinking of better, faster ways of doing things. In fact, I always had my own Excel spreadsheet with my own formulas that facilitated my job. And I always thought, why can't we put this into the system so everybody can use it? Because people will come to me and say, how do you do this so fast? How do you come up with this so quickly? Or why is Annabelle always getting approval so fast? Because I have a system. And if you follow the system, if you do it all the time, it becomes fast, right? So I think that AI is going to take over the industry. It has been for a few years now. I've seen it, I've done it. I think it's a matter of time and investment. Companies will see competition and they're going to start investing in technology. Um, as it is, the company I work for, they built this portal for mortgage brokers, and direct lenders also have technology that is taking over loan processing, compliance, QC in many different ways. When a mortgage company receives a mortgage loan or an application, it goes through a process, and that can take days from the loan going from this human processor taking the application, running the credit report, uploading the documents, or requesting documents from the client. Technology now, if the consumer agrees with, there's a little bit of security reluctancy, if you want to call it. People don't want to give their passwords, but there's gonna be there the time is coming where they're gonna do it, because it makes it so much easier, where you log in into the lender may send you a link, you log in, you put in your passwords, and guess what, the system will pull your pay stubs and your assets directly from your employer and your financial institution. The borrower doesn't have to download a PDF and upload it. That's going to be obsolete eventually. So that system is now being implemented, where you don't have to do much other than log in and password, boom, click, and then the lender says, "Hey, we got your pay stub, we got your assets, we're good to go." Also, for collateral, when you want to know the value of a property, many years ago and even now, you need to pay an appraiser, a human appraiser that comes, does a physical inspection, takes pictures, and gives you the value of the property. So now we have systems that have collected so much data through the years that they have enough information to say this is the value of the property. And I mean, you can do it there's a lot of free links out there where you can do it, but lenders have their own proprietary systems that does that, and they don't have to pay on appraisals. A lot of products like jumbo loans, high loan amounts, where it's very risky. Sometimes you need two appraisals from two different appraisers. And that's fine, because lenders have their own guidelines, and they say, look, if I'm going to give you $3 million to buy a home, I want to make sure that the collateral is there and the value is there. In case of foreclosure, and in case the bank needs to take over the property and resell it, they want their collateral to be the value for the loan to value, the LTV, what is called. So, in essence, for conventional loans, what we call vanilla loans, easy loans, loan amounts are what, I don't know, 500,000, and the lenders see not much risk. They run what is called DU or LPA, and then if the DU or LPA says, hey, the value is accurate and appraisal is not required, the lender is good with that, and when you're buying a property, you most likely you're going to have a real estate agent. Most likely you're going to go inside the property and see it for yourself before you sign the contract and agree to buy it. So there's a lot of smart things that we're doing using common sense, thinking, you know what, if the buyers already signed the contract, that means they looked at it, they like it, the house is good to go. And if the collateral comes back saying we don't need an appraisal, we're good to go. So there's a lot of automation happening already, and lenders and consumers are coming to terms with the fact that there's going to be more automation coming in, and eventually processing, underwriting, funding, servicing is going to be not fully automated, because I still believe that the human interaction is needed, because there's a lot of complex things that only a human brain can manage. But there's definitely going to be a lot more automation, and it's coming. It's already out there. It's just a matter of accepting it and investing in it for a lot of companies.
That's great. That's great to have your opinion, and it's very interesting. Um, and Share's mission is about more than just deals. It's about creating equity, both financially and socially. And what does the future of home ownership looks like to you? And where do you see shares' role in that future, especially in this market post 2025?
Well,
The
there's so
future
bright.
of home ownership.
Well, see, we're working on affordability and supply and demand. I think those are the biggest issues. Um, Not having enough space to build, like San Francisco. There are areas where there's not a lot of affordability. San Jose is very expensive, for example. Mountain View, Sunnyvale, all those areas. Properties are, I don't know, 1.5 to 2 million. And unless you buy with another person and you have two salaries or three salaries, which is kind of the mission of Chair, and what sets them aside from the competition is that that's their mission. They want to be able to help individuals have ownership and create wealth by the way of equity. And there's no other way. If you want to buy far away from a city, from a metropolitan area where all the jobs are, which is what a lot of people do in Silicon Valley. They buy in Manteca, they buy in Fresno, and then they commute every day to work, 2 to 3 hours drive, um, in order to afford a nice home that they can pay. And so that's what Chair does. We're a mortgage broker. We're a real estate agency. So it's a one-stop shop there. And also you get education. And one of the things is people don't know about credit until they need it, or they don't know mortgages until they apply for one. And I believe, and Chair is big in education, so I feel like you need to start education early on in life. I don't know, maybe after high school, I think it's a good age when you become an adult after the age of 18, when you're able to apply for credit cards and being able to learn how to use. It's not just applying for credit cards, being able to manage your credit card and not go crazy and then have a lot of debt and then not being able to pay your debt. So that education is not out there. So, oh, that's your dog.
A small one.
That's why I close my door, because my dog would be over here. So education is important, I think, and I think it's not out there for a lot of people that graduate from high school. I think they need to be educated on credit and responsibilities on how to manage it and how to build your credit to the point where you can get a high FICO score, apply for a mortgage loan, and get an excellent interest rate. Because remember, the higher the FICO score, the lower the interest rate. And so, I mean, they go to college, they get student loans, they don't pay their student loans, they default on their student loans, and there are ways that they can work around that. Once this is another completely different subject, but if you get your student loan on deferral, and you can buy a property and then get a HELOC or a second mortgage and then pay off all your debt. That's a way to do it. I mean, there are programs out there where they will pay off all of your student loans, and
Interesting.
that will help
Right.
you. I mean, there's a lot of things out there that people don't know, and they don't know until they decide to learn. And in some cases, it's later in life. So I wish, for example, when I was in college, that I knew a lot of the things I know today. I may be richer today, right? so yeah.
Yeah, I mean, people need your advice. I mean, it's hard to know all these about how to get rid of your debts, and especially when you're very young and you get so much debt as a student. Um, but you're here to advise them, I guess, and I appreciate your advice and your insight. This is uh, very, very interesting. And you have worked um, at both the tactical and strategic level of finance. And for other leaders um, trying to innovate in a very risk averse industry like credit or housing, what advice will you give them?
You mean to purchase a property, or just
To
advice in
purchase a
general?
property?
Well,
Okay. It's for other leaders.
oh, for
Yeah,
other
it's a
leaders.
good. Yeah. Well, okay. That's a good idea. Anything you wished you had known earlier in your journey yourself?
Um, well, let's see. It, when you're a mortgage underwriter, basically you learn you learn
As it
you learn
goes.
you learn the ins and outs of the mortgage. Maybe you learn too much, and so just get yourself out there, because um, people oftentimes they don't know, and they need your guidance. And I'm not sure if I'm answering your question, but just go out
No,
there, help.
it's on a personal level. I wanted to know if you wish you knew something. I mean, you had known something earlier in your journey to make things different, so maybe to go faster. Um, that's a that's a question I ask to every one of my guests, but you answered. It's a long
Well,
process.
I don't think I did. Let me answer it now. I think that if I known what I know today, as a young individual, as a young professional, it would have been amazing. It would have saved me from so many mistakes. And like I said earlier, I'll probably be richer today. But on the other side of the coin, I had to go through all of that, through all of those experiences, and make all of those mistakes in order to become the person I am today. And the person I am today is someone that is ready, that is not selfish. I'm willing to to uh, to teach anyone. I'm willing to pick up the phone and do things that don't cost any money. That I know I can help you, and I'll help you get there. And in my mind, I'm not thinking, oh, I'm not gonna make any money out of this. The satisfaction I get from helping people is greater than any money. And so maybe when I was younger, I would have been thinking about money. I would have been thinking, well, why should I help this person if I'm not going to get any money? Because when you're young, you are greedy a little bit. You want to make money. And I'm at the point where money is great, but helping people is, to me, is it's a lot more rewarding than money.
Yeah,
So maybe it comes with
you have more
age.
wisdom.
Yeah, maybe it comes with age, maybe it comes with having children, and thinking, if I do something good for somebody, somebody's gonna do something good for my kids, you know. So
Great answers. Um, let's end with a few quick questions. And first thing come to mind. One book or idea that changed how you see your work.
I've read, I mean, my eyes, I don't even know how I have these eyes because I've read so much. You have to read so much. I mean, think about it. When you're undergrad, you're looking at documents day in, day out,
I
reading,
know,
reading, analyzing
I
that.
know, I know.
But if there's a book out there, I want to say Fannie Mae Guidelines is a book,
Okay.
and
Uh,
it's good. It's good to have that memorized. It helps you a lot in your job.
of course. Um, what's a daily habit or workflow do you rely on? Something you do all the time.
Something I do all the time is I make lists. And
List.
yeah, I make a
Yeah,
list of things I'm gonna do every day. And as I
yeah.
do them, I cross them out so I don't forget. If I'm talking to you and you say, Annabelle, you know what, next week, why don't we do this and that? Believe it or not, it's
Yeah,
already in my notes. And I put it on my calendar and I put it 2, 3 days before as a reminder, or hey, don't forget to do this. Or so I'm
I love it.
big on calendar and notes. I think again, the technology is on my
No,
phone.
no, this,
Why not use it?
yeah,
Yeah.
no, no, very good. I love it. List is very important. Task list and a calendar, definitely. One misconception about housing or credit you wish more people understood.
Well, a lot of people think that you got to put 20% down payment and they save and save and save. I mean, there are programs out there where, like FHA is 3.5%. Um, Fannie has a 3% down payment. USDA, VA are 100% finance. You don't need a down payment. Um, another good one is, that renting is better than owning. And again, we go back to equity. When you're renting, yes, it could be cheaper because you don't pay hazard insurance and property taxes, and you don't do the maintenance on the property. And, a lot of people love renting, and if that's what they want, great. But if you own a property, you own the land, you're a homeowner. I mean, it's a different sensitivity there, I think. I think that makes you more confident in life, and you
That's
feel,
right.
hey, this is my legacy, this is what I'm going to leave my children when I die. And that happens. That's exactly what's going to happen. And so why not build a legacy? And so I think that's a huge misconception.
Yeah,
Um, Also, that you have to have the perfect credit. It's not always the case. There are alternative programs out there um, where you don't have, again, a VA doesn't require a FICO score, and if the lender is following VA guidelines, FHA is the same way. Um, as long as you have trade lines and you've been making your payments on time, you're good to go. Um, what
excellent.
else? Um,
You
hmm,
answered. That's
yeah, I
perfect. That's perfect.
can. So,
Uh, a last one. Uh, what keeps you motivated, even when the work is very hard?
well, I like my work to be hard. I mean, I left companies, I left positions when the job was boring or when it was doing the same thing every day. I love challenges. I love seeing a puzzle in front of me and I can take on this challenge. I can solve this problem. So I'm a problem solver. And what keeps me motivated um, is what I do, is being able to be a part of a family owning their first home. To me, that's very exciting. Or showing a property and people saying, I want to buy this home, and me being able to make it happen for them. Or when you're listing a property for a seller and you manage to get exactly what they want. And that's not always easy, because you go into negotiations, and the buyer will find something wrong with the property. So you want to be able to balance those transactions so you can make your client happy. And on the mortgage side, it's the learning, the being part of projects like Zytro, where I was talking to the engineers and helping put all these automations in place because of my knowledge. And to me, is an honor. And also, I mean, you have all this knowledge, and if you don't share it, what's the good? I mean, you want to help other people, and you want to be able to teach them what you know. Again, we go back to education. I want to be able to, if I have a school and I have all these teenagers, and I can teach them how to mold their credit, how to build their credit, how to manage it, so they can afford a property. That would be great. And that motivates.
That's beautiful. That's wonderful. That's your mindset. You have a growth mindset, very positive as well. That makes you very motivated. And Annabelle, thank you, thank you. This was such a grounded, insightful conversation. What you're doing at Share goes beyond product and policy. It's about changing the story of who gets to participate in ownership and how. And I'm really glad we got to share your voice and perspective today. Thank you
Thank
very
you.
much. Thank you very much for being here. It was awesome. And for our listeners, as always, stay hungry, stay foolish. And
Hmm.
I see you soon, Annabelle. Thank you.
Yes, thank you.
Thank you very
Bye.
much.